What's up, everyone? It's Karthik with Money Vest. Welcome on board for our market close live stream. Today's the big day. We've got Nvidia earnings coming out, so hope you all are ready. Markets are essentially flat. We are slightly higher on Nvidia for the day. We're up a little bit over 66 basis points. So if you guys can actually see me and hear me, if the audio and the video is good, just give me a thumbs up. I just want to make sure that there are no technical issues, and let's do this. I mean, it is going to be very, very interesting. Again, we're kind of excited because there's a lot of mixed views on Nvidia, whether we're going to be rallying or whether we're going to see a bit of a dump. There are a lot of China issues. There is a bit of a transition from hyperscalers over to the actual application of AI. And of course, the UAE and the Saudi Arabia have committed to a lot of money to investing in their AI infrastructure. But then, of course, you've got the US sanctions on China, which are restricting Nvidia's ability to sell a lot of their chips over in that country, which is, again, one of the biggest demands for artificial intelligence. But of course, reportedly, Nvidia has been working on a lesser priced chip as well that they are planning to also sell to China. So you got lots of updates coming out, hopefully from Jensen Huang over the next couple hours. Nvidia is expected to report earnings around 4:20 p.m. Eastern, so about 15 to 20 minutes after the markets close. And then the actual earnings call is going to take place around 5 p.m. Eastern. So that's going to be 1 a.m. for me, an hour after the markets close. So depending on how Nvidia is doing after hours and how I'm feeling, if I'm not too sleepy, I'll definitely be live for those earnings. But like I said, it becomes very, very challenging to be up till 1, 2, 3 in the morning to actually listen in on all these earnings calls. Of course, I'll listen in on all of them a few days after when I've got the time, but listening in during the earnings when it's like 1 or 2 in the morning, it's definitely not easy. So hope you all are doing great. Welcome on board for Nvidia's first quarter fiscal year 2026 earnings. Once again, thanks for joining, everybody. We've got a poll going on right now, so make sure that you do participate on that poll as well. Audio and video is good. I didn't even notice I had Nvidia puts from last week in a different account I don't use. Been getting theta to hell, shaking my head, and naturally it's going to gigapump, so they go to 0. That's crazy. You got to monitor all your positions, man. So that is very, very important. I was actually planning on adding, a few more 100 shares for Nvidia today because it wasn't really going to move my cost basis all that much. It was going to be getting my cost basis up to like 116, 117, and then I was planning on selling a lot of calls against my position. I've already got 6 calls on Nvidia that I've sold, so those are short calls. So if Nvidia dumps after the earnings, which I guess the broad consensus right now is Nvidia has a lot of expectations to meet. And it's possible that Nvidia actually drops after hours, which I would not be surprised to see if it drops back below 130. Then those calls act as a hedge, and that's when they come in handy, right? That's when you wish you had those calls because of the hedge that they provide if, of course, the stock drops. So let's listen in a little bit on CNBC and let's see what they are talking about.
We have breaking news from Megan Casella in Washington, and it is impacting chip names and the market as a whole. What are we learning here, Megan?
Absolutely, Scott, that's right. This is the Financial Times reporting, according to several people familiar with the matter, that the Trump administration has told software companies that offer software used to design semiconductors to stop selling that software to Chinese groups. They say several people familiar with the move say this is coming out of the Commerce Department, the Bureau of Industry and Security, that they sent letters to what are known as electronic design automation groups. That includes Cadence, Synopsys, and Siemens EDA. You can see some of these stocks are down big on this news, saying that they sent these letters to stop supplying their technology to China. Now, it's not clear if every EDA group, the FT says, got this sort of letter from the Commerce Department, but of course, this is the latest step trying to slow China's rollout or development of advanced AI chips. And I was just talking with officials inside the building here about this one, Scott, and the Commerce Department says on background here, they're not confirming or denying this report, really. They're saying the Commerce Department is reviewing exports of strategic significance to China that in some some cases, Commerce has suspended existing export licenses or imposed additional license requirements while the review is pending. So no specifics on this report exactly, but we can report clearly that there is some work being done on this front, and you can see the impact on the stocks. Scott?
Yeah, we'll take it at face value then. If they're neither confirming nor denying, we'll go with what the impact is. And you set it up well. Megan, thank you very much. It's Megan Casella. We'll watch the stocks. And by the way, I mean, NASDAQ was green just a short time ago. NASDAQ's now negative. The overall market has taken a certain turn, at least marginally, for the worse. Christina Partsinevelos, we brought her back because she knows this space so well. Does this surprise you in any way? It probably shouldn't surprise anybody, any company that has any, technological advantage in these areas as it relates to selling things in China.
Precisely, and it reminds our audience of what to expect too from Nvidia's earnings after the bell. Why? Because there's still that overhang of export restrictions that are looming. We have, so I reached out to Cadence and Synopsys to get a comment. Synopsys, keep in mind, their earnings are out after the bell today at 4:05 p.m. Eastern, so they're not going to be commenting. I haven't heard back from Cadence, but those are it's a duopoly essentially when we're talking about designing the software to build these chips. It is an important part of the process. So logically, it does make sense if the United States wants to block those services to China, because with those services, that's how they're able to build more advanced chips. I just wonder now, too, if China's going to retaliate. Just recall last week, China got angry at the United States for making comments about any American companies that buy Huawei chips, that they would be in trouble. And so China actually said that they're abusing export controls to suppress and contain China. So I would assume once this comes to light and everybody agrees or admits to it, I'd assume China would be very vocal. And this doesn't really calm the waters between both countries either, and still points to an overhang for a lot of the chip names in the sector and why we see so many of them range bound just over the last year.
We also need to see whether there's nuance to what is a headline by the FT into the actual order, if one is there, and what it might mean. This, what often happens, and we've seen it in countless examples, whether it's the market as a whole, Christina, or some of these stocks at times, is the knee-jerk initial sell-off that when you get a little more clarity around things doesn't look quite as bad. I don't know whether that's going to be the case, obviously, but we kind of need to wait and see.
Yeah, so the clarity would be in terms of the total revenue going to China. So that I have not had a chance to even check yet to see. Maybe it's a smaller portion, and much like we saw, and I'm going to give Nvidia, AMD, Qualcomm some light, because they're able to shift a lot of their China sales to other countries, specifically the Middle East. So perhaps that's going to be the case for Cadence and Synopsys, with everybody buying all of these chips and building out their AI infrastructure over there. One door closes, the other one opens. Perhaps the portion of sales is quite small, so perhaps the 9% drop in the stock price for some of these names is a little bit overdone. But there's the retail tradings and the quants, right, going after the headlines.
Yeah, I appreciate you helping us keep that ball in the air. Christina, breaking news that's affecting.
So yeah, export bans, and we're seeing, obviously the market dump here. Nasdaq's back negative, down about 23 basis points, and Nvidia is really taking the brunt of that pain once again on those news. Breaking news from White House on software export bans over on China. Once again, escalating those trade tensions. Of course, we know that Nvidia has been in the middle of all of these sanctions that have been put in place by the US over on China. And the expected impact on the top line revenues around $7 billion, because AMD also announced in their earnings that their impact on these restrictions were around 47% of their GPU, CPU market, which again is pretty substantial. So if it's going to be on the higher end, and a lot of analysts are saying that Nvidia's earnings this quarter are going to be quite messy, and the quarterly guidance that they're going to be providing for is also not going to be exceptional. So it's really a lot of trade tensions coupled with some political sanctions put in place between the US and China that are really hurting that momentum to the upside. Of course, Nvidia is still higher. In the last month, it's up over 40%. It's rallied quite a bit from its lows of, I think it was trading at $80 a share at some point in April. It's back up to over 135. It's still flat on the year. So year to date, Nvidia is still very, very flat right now. It is essentially as flat as it gets. It's down about 18 basis points. So nothing crazy. In the last 1 year, it's up over 23%, but it's trading to its same levels as it was back in June of 2024. So super important earnings. They're going to be released at 4:20 p.m., so about 15 to 20 minutes after the markets close. Of course, we'll take a look at the earnings themselves. They're going to be for the first quarter fiscal year 2026 once they come out, and then we'll listen in on the earnings as well. Again, it's going to be 1 in the morning for me, so hopefully I'll be able to keep up because I do like to go to bed at a reasonable hour, and that's why it becomes very difficult to be live during the earnings calls. But nonetheless, we'll try our best. Okay, gonna do a video on CRM. So I shared a couple of my updates on CRM in the Discord. It's, you know, in the past, it's been a little bit more of an expensive stock, trading at over 45 times earnings multiple. I do like that as a company, software company, great business overall. But like I said, the valuation's been a bit of a concern. And as a tech company, it's never had the best balance sheet. It is decent, but compared to other tech names, the balance sheet certainly is not the best. So, those are my thoughts on CRM overall. All right, so why Karthik's fade to beard blend is always on fire. Thank you so much. I appreciate that. And again, if you have any questions, you guys, let me know. I'm happy to answer. I'm happy to go over any particular stock before the earnings, of course, because we're going to have our focus on Nvidia. That's going to be the front and center of our analysis today. So Arif says, I know you will stay till the end. You will not be able to sleep without listening to the whole thing. I don't know. I sleep like a baby with or without the anticipation because that's the whole point of our investing and trading life is to not be glued to the screen and the news all the time, but really have that peace of mind that regardless of what's happening, you are okay with the decisions you have made. As Warren Buffett has said, many times over, that you want to be investing in companies that, even if the market shuts down for the next 1 year, you're still fine, right? You're still confident and you're still okay with the decisions you've made in the market. So, even if I do listen in on the earnings tomorrow or today, for me, I continue to believe that Nvidia is going to have a very strong future, especially when you consider there's a lot of countries, including the ones here in the Middle East, that are literally just getting started with the rollout of their AI infrastructure. So there's at least a couple more years worth of runway left for hyperscalers such as Nvidia to scale, the adoption for artificial intelligence, the GPUs that they are producing, and there's going to be some very strong demand coming in for Blackwell. So, and then again, a lot of the the headwinds are coming based off of things that are created, right? Not threats per se, but these are mostly sanctions that Nvidia just has to work around. AMD just has to work around. Broadcom also has to figure out a way on how to kind of work around those. So it's not really a demand or a competition issue, but it's more like a creation of those problems that of course has happened between the U.S. and China.
Support the certification and commercial production of the company's electric air taxis, and that's a big investment. Vote in the right way, which is why shares are up 28%, Scott. Best day since 2023, too.
Thank you very much, Christina Partsinevelos. Abercrombie's a big mover today, too. We'll tell you exactly why when we come back on the bell.
All right, so let's see. Why are we seeing a double top on the technical chart? So what stock are you referring to there? Debunk Geopolitics. I'm happy to go over that. If you tell me what stock we're looking at. Double top on the 5-year on the S&P 500. Let's take a quick look here. So SPX, if you come over to, let's say, the monthly chart and on the 5-year chart, I don't really see a double top per se. This has just been nothing but a consistent rally for the market on the monthly time frame. If you come over to the weekly time frame, again, there isn't really anything that screams like a double top. On the daily time frame, we are, of course, coming up to the resistance once again, which we had discussed in our weekend update, which is sitting roughly at 6,000. So 6,000 is a level for us to watch. Okay, so Nvidia you're referring to. Let me take a look. So on a monthly time frame, let's see. Look at that monstrous move in the month of May here for Nvidia, up over 24% this month. But let's see, on the weekly time frame, again, we've got a very strong resistance sitting at the 150 target. Whether we're going to see the breakout above that level, whether we're going to see a new all-time high, Of course, depends on the guidance, depends on the earnings themselves and what Jensen Huang says. That's why I kind of moved out my calls today. So earlier today, about an hour ago, I sent out the alert moving out my calls from 140 to 150 because I feel like 140 could be too close. If Nvidia does pop after the earnings, 140 could easily be breached, and those calls will be in the money. So I moved them out to 150, a little bit further out in expiration to December 2025. So you can kind of see my position here for Nvidia currently right now. PNL open is just over 18,000. That's between the shares and, of course, the calls. And I've got SoFi, and, of course, I've got Tesla in this portfolio as well. So this is the options portfolio that I've been keeping track of and sharing with everybody in the Patreon as well. But here we go. We're starting to see this red get started. Nvidia getting absolutely dumped. We got the NASDAQ now down over 30 basis points, and S&P is now down over 0.5% at the moment. So pretty decent sell-off coming in for the market after yet another restriction from the Trump administration on software export to China. Let's see. What are your thoughts on the effects of Nvidia earnings on the overall market? So I think majority of the markets have already reported. Retail's out of the way, financials, tech for the most part. Nvidia is usually one of those companies that reports, at the very end of the earnings season. So I think it's going to be more of an Nvidia specific impact. For the entire market, sure, it's going to have some impact on technology, but all in all, I don't see this as like a, of course, in the past, we've had Nvidia kind of move the entire market in one direction or the other. Same things happened with Apple and a lot of these tech companies, big tech companies. But I think we've already seen some good numbers come out of Google and Microsoft, and can't say that for Tesla, but Meta reported some good numbers. Even Apple, to some extent, reported some decent numbers. AMD reported some okay numbers, and so Nvidia is just going to be reaffirming what we already know, that there are going to be some choppiness over the next couple of quarters with these trade tensions, as well as Nvidia-specific problems that are more geared towards U.S. and China sanctions and restrictions for chips, for semiconductors more specifically. So that's what I believe here. I don't really follow much NEO news here, Vishal. We used to cover that stock, quite a bit back in the day, but of course, it's been a huge underperformer. I feel like NEO's focus was in too many places at the same time, and they weren't able to really focus on one thing at a time or doing one thing really well. Instead, they just kept on launching newer and newer cars, but not really making the company profitable. And for me, that was not the best approach of running the company. So, we're talking like 4 years ago, we used to obviously cover NEO, but not anymore. Okay, do you like Uber at $90 for the next 5 years? Let's take a quick look here. So, Uber, almost at an all-time high, right? Very, very strong rally coming in from 2022, from $20 all the way to almost $90. It is now starting to turn profitable, which is very good to see. So 2024 was a very strong, profitable year. For Uber, quarter over quarter, we're seeing a little bit of an inconsistency, but all in all, it is coming in with some strong net margins. Valuation seems to be a bit more reasonable on an annual basis even. It's trading at 15.5 times earnings, 4 times sales, 23 times cash flow. So not terrible. But yeah, no. Overall, I do like Uber as a company. I think I've covered the stock multiple times in the past, and overall, I think Uber is one of those stronger companies. But again, comes in with a little bit of vulnerability with regards to FSD. So Tesla, if and when they actually launch at full scale, full self-driving, again, rideshare, then Uber could be under some potential threat from Tesla as well. Something to keep in mind, of course. All right, so we are almost ready with the market close here. Very, very close. 6 more minutes. Markets overall seems to be absolutely getting dumped right now, with Nvidia here down a little bit over 25 basis points. So we were obviously green at some point at 137. Of course, since then we have sold off over 1.5% after the news here. S&P is down about 0.5%. NASDAQ is down over 0.5% as well. Volatility is just over 2% higher, and crude oil prices sitting at just over $61 And of course, market breadth also a bit more overbought. We're sitting at almost 70% of stocks trading above their 20-day and 72% of stocks trading at over 50-day moving average as well. So, Christopher, if you were new to the stock market and you can only buy one stock, which one will you choose? We've covered this on our Patreon videos as well. I think it's really important to lay the foundation with your maximizing your tax advantage accounts first. So, at the very core of your investment journey and your personal finance comes your debt repayment, right? So the first things first, if you've got high interest debt, clear that out first so you're not kind of bogged down with those debt payments and those compounding working against you. So paying off debt is number one. Having an emergency fund is number two. Maximizing your tax advantage accounts is number three. And that's when you move over to number four, laying the foundation with a individual investment account, which is looking at ETFs as well as individual stocks. And then again, laying the foundation with a broad-based ETF or index fund first, and then having any extra additional capital to maximize it with individual stocks that you can start layering on top. Now, I am a big believer, that in the beginning, especially when you are first getting started and you are looking at growth and being a bit more aggressive, concentration is going to be more beneficial than diversification. And I know this goes against the popular belief, don't put your eggs in one basket. But once you have the foundation, which is having an ETF or an index fund, that is good diversification in itself. Then in order to grow aggressively and actually build, concentration and conviction is what's going to get you there. So that's when you want to build out a very strong, good, high quality portfolio of a handful of stocks that you've studied, spent a lot of hours understanding, and that's when you can build out that conviction to go sort of heavier on those companies after fully understanding their businesses inside out. Palantir's gone 20x, in the last couple of years. Tesla, another 1,000%, Nvidia 1,000%. So it really just takes a few ideas to hit it big in the market. And of course, that's where a lot of that research comes in, because concentration builds wealth and diversification keeps it. Because the younger you are, the more aggressive, in my opinion, one needs to be, and you can take on more risk. Of course, the older you are, the more focus you're going to have on income as opposed to capital appreciation. So that's the distinction that I think every investor needs to make for themselves, is whether they're making investments purely based on growth or income. Now, there can be a balance of both, but everyone has to kind of understand, what is it that they're investing in and what's the actual purpose for that. Okay, so market's about to close here in a couple minutes.
More clues into how the consumer is doing and how companies are managing President Donald Trump's trade war. We'll hear from Best Buy, Burlington Stores, Foot Locker, Kohl's, Costco, and Gap. Scott, back to you.
All right, Gabrielle, thank you very much for that. Steve Kovac looking ahead to Salesforce. What do we need to know?
Yeah, the big one to watch here, Scott, is the momentum behind Salesforce's AI product. That's called Agentforce. Now, lots of hype around this one from CEO Mark Benioff. Last year, he said Salesforce was going to hire 2,000 people just to sell this one product. And last earnings report back in February, company said it had 3,000 paid deals that included Agentforce in them since October of last year. The newest version went on sale back in February, but still in hype mode for Agentforce. Salesforce's CFO said to expect just moderate contribution to sales from Agentforce this fiscal year. That's expected to grow from there. So we'll see if there are any more signs. In this report, Agentforce is taking off. And don't miss Salesforce CEO Mark Benioff. He's going to be on Mad Money tonight with Jim Cramer, Scott.
All right, appreciate that. Thank you, Mike Santoli.
All right, everyone, so we got NVIDIA here on the top right, so make sure that you do participate on the poll as well, because we've got a poll going on right now. We got over 500 votes, and make sure that you do participate. What are you expecting from NVIDIA? Are you expecting a rally, or are you expecting a crash after the earnings from NVIDIA once they come out at 4:20 p.m. Eastern? Again, 90 cents is going to be the earnings per share expectations, with the revenues expected at just over $43 billion for the company as well. That's going to be over a 60% growth on a year-over-year basis and over a 40% growth on an earnings per share. So we're looking at around just over $42 to $43 billion in revenue with an EPS of just over 85 cents per share from the business.
Or if
or just keep it on a short leash? Because at any moment, there could be something that comes along that says we're closing off a market to you, or, we have the DeepSeek is still like fresh enough in our minds that we have to be careful about projecting out more than a couple of quarters how big the growth is going to be. But, we'll see. It's a great test for market psychology, for the willingness to believe. And it's interesting to me that by all measurements, retail traders have been backing away from the stock when it was one of the favorite playthings. They've moved on to other things. I don't know if that's a good contrarian signal or if it's something that says that maybe the fever's broken in this name.
All right, well, moment of truth. Not that far away. We got those numbers in overtime. Bell's ringing at the red, but it's all about Nvidia. I'll see you tomorrow.
That's the end of regulation. Measured risk portfolios ringing the closing bell at the New York Stock Exchange. First Advantage doing the honors at the NASDAQ. Stocks losing early morning gains, closing near session lows as investors await Nvidia's earnings later this hour. All 11 S&P sectors lower. Utilities, energy, the worst performers there. Retail in focus today, too. Capri, Macy's, and Abercrombie & Fitch all reporting, all cutting full-year guidance due to tariffs. Shares of Abercrombie, though, did post their best day in 2 years. Box soaring after reporting strong results, giving better-than-expected guidance. FICO recovering from yesterday's losses. Baird upgrades that stock to outperform, saying it has an attractive market position. Home builders, though, lower across the board as yields rise again. The 30-year crossing back above 5% earlier today. That's where so much of the action has been. And in the last hour, shares of Cadence and Synopsys moving sharply lower on reports that the president has ordered companies that offer software used to design semis to stop selling services to Chinese groups. We've got more on that straight ahead.
Well, that's the scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Ford, along with Morgan Brennan, and the big news we are waiting for today, results from Nvidia. That stock slightly lower today, up 24% so far in May. That's its best monthly gain since May of 2024. Before we get to that, a host of other reports expected in the next few minutes. Salesforce, Synopsys, C3 AI, and ELF Beauty among them.
And as we await those results, let's focus on today's action as the markets pulled back slightly, losing their early morning gains, with the S&P finishing down about 0.5% here. Bespoke Investment Group co-founder Paul Hickey and Evans May Wealth managing partner Brooke May join us. It's great to have you both here. Brooke, hey. I'll start with you. What are you watching in this market, especially as we do see stocks diverging from bonds, a dynamic that's been going on for really a couple of weeks now, but is certainly in stark contrast with the pop we saw yesterday in the S&P.
You know, we think there are reasons out there to be optimistic. For months now, we've been waiting for the hard data to deteriorate, jobs numbers and retail sales to be specific, and we haven't seen it. We expect those to align with the soft data over time, like consumer sentiment and consumer confidence. But the labor market's held up. We've got unemployment at 4.2%. We added 177,000 jobs last month. Average hourly earnings are up 3.8% year over year. In addition to retail sales are decent. So over the last few years, the labor market has been what's held up this economy, while a lot of strategists were expecting a recession. And if consumers have jobs, they're going to spend. So we think that there's reason right now to be optimistic.
Okay, we're starting to get some earnings reports. Salesforce included are going through those results. We'll bring them to you momentarily here. So, Paul, as we do await those, okay, and we're ready to go with Salesforce. Steve Kovac has those numbers for us. Hi, Steve.
Yeah, Morgan Ends beats on the top and bottom lines here. We're looking at EPS beating at $2.58. Adjusted, Street wanted to see $2.54. Revenue, a slight beat here at $9.83 billion. Street wanted to see $9.75 billion. We see shares up 4.5%. I'm still digging through the report, but those are the top and bottom lines there for you. I'll send it back over to you, Morgan.
Okay. The shares up about 4.5% right now. Don't miss Jim Cramer's exclusive interview with Salesforce CEO Mark Benioff. That's coming up at 6 p.m. Eastern on Mad Money. Paul Hickey, I'm going to go to you because we're talking about a blue chip name, a Dow component with Salesforce, and it is very much the focus is agentic AI. So as we await NVIDIA earnings, how does this set the stage for where we are in this broader AI trade?
Yeah, so I think we'll want to see how they're monetizing their AI agents. There's a lot of promise there, but the market's looking for results. But the fact that they beat earnings and revenues is pretty impressive based on just the last 4 quarters, they've missed at least one of those 3 out of 4 times. So there's been some erratic reports in Salesforce over the last year, and the fact that they were able to beat on both the top and bottom line is encouraging. And then I think going back to Brooke's point about the broader economy and market overall, everyone's been waiting for the hard data to catch down to the soft data. What if the soft data catches up to the hard data? And we've started to see that a little bit in the flash PMI readings last week, which both saw a sequential improvement. And then yesterday's consumer confidence report was one of the biggest jumps off of a 52-week low that we've seen in the index throughout its entire history, especially the expectations component. And when you see those types of big moves higher off of a multi-year low or a 52-week low, it's generally been positive for the market going forward, as showing a shift in sentiment.
Sound like Billy Crystal, better to look good than to feel good. We'll see what the data says. Meantime, Pure Storage results are out. That stock heading a little bit higher here in overtime. Pure Storage reporting a fiscal Q1 that beats on the top and bottom lines. Let's see, it's a little lower now. Guiding to Q2 revenue above consensus as well, but not raising the full year outlook just 1 quarter in. While Q1 revenue came in at $778 million versus $770 expected. Non-GAAP earnings per share at 29 cents adjusted versus 25 expected. On the guide, Q2 revenue, Pure guiding to $845 million versus $842 expected. I spoke to Pure Storage CEO Charlie Giancarlo earlier about the results. He told me product revenue is a particular standout, in part thanks to Meta. Also, with tariffs and macro uncertainty, he's not going to raise the guide for the back half of the year just yet.
I want to see a lot of bears and bulls emojis, so let me know, are you a bear or a bull in this Nvidia earnings? So again, make sure that you participate in the poll right now. I got 61% expecting the Nvidia stock to rally after the earnings. We've got another 13 minutes until the earnings come out at 4:20 p.m. That's when the earnings come out. And 39% expecting a crash. So send out all the bear and the bull emojis, depending on where you're sitting with Nvidia.
EPS and revenue also beating expectations. And then another little interesting note here that's expecting a currency tailwind. Salesforce saying we know what the foreign exchange rates have been doing recently there with the dollar. So that seems to be boosting Salesforce as well. We see shares now, they're up 5% here after market. Guys, I'll send it back over to you.
Indeed, Steve, thanks. Brooke, what should investors do with the top-heavy S&P? Quite a few large stocks, technology stocks in particular, had been powering that for quite a while. We've seen some broadening out, but now we've also got these yields to contend with. Are large technology names safe right now or not?
We think the biggest names are. Not all technology companies are created equally. Some are trading at much higher multiples than others, but companies like Nvidia, trading at a similar multiple to what their earnings growth rate is a buy, in our opinion. And any weakness, we think, would be a good buying opportunity. So we continue to like big tech. We think that it will be continued leadership in the market going forward, but the broadening and the other 493 names of the rest of the market is welcome.
So, Paul, what about the smaller caps? I know you've paid a lot of attention to those in the past, but they can be interest rate sensitive sometimes. So during these times when we do look like it's higher for longer and tariffs are affecting arguably smaller companies more than the larger ones, how should investors play it?
Yeah, I mean, I think those are concerns with the smaller companies when you get to the real small caps, but within the large cap space, I don't think it's as much of a worry. And the thing we look at is if you just go back through history, the largest stocks of a certain era are generally 10, 15 years later not the same stocks that will be the largest stocks going forward. You tend to see rotation there. So I think you don't necessarily have to see these stocks, fall precipitously, but they can underperform and look for new leadership to emerge in the market. There's plenty of growth stocks that aren't trillion-dollar market caps where you have, where it's easier to have strong rates of growth relative to these, like a stock like Nvidia with a $3 trillion market cap and revenues in $300 billion range. So I think you want to broaden your perspectives.
Okay. Paul Hickey, thank you. We'll see you back here in just a little bit. Brooke May, thank you for joining us as well, with all the major averages taking a breather today, down about 0.5%. Now, we got some breaking news in the last half hour that the U.S. is suspending some export licenses to China for certain software companies. Megan Casella has the details. Hi, Megan.
Hey, Morgan, that's right. The news here being that the Trump administration has told U.S. chip designers to stop selling their software to Chinese groups. Now, that's according to the Financial Times, citing several people familiar with the matter. They say the Commerce Department sent letters to electronic design automation groups, that those include Cadence, Synopsys, and Siemens EDA, all of which had been down initially, now back up, it looks like, after hours. But they say it's not clear that all electronic design automation groups got this letter, but this is, of course, the latest step as the Trump administration is looking at different ways, continuing the Biden administration's moves to try to slow the Chinese rollout of advanced AI systems. Now, I spoke with people inside the building here about this story, and a Commerce Department official on background told me this, saying the Commerce Department is reviewing exports of strategic significance to China, that in some cases, Commerce has suspended existing export licenses or imposed additional license requirements while the review is pending. So not a specific confirmation or a denial of this story here, but clearly there is some action going on, and we have seen so far in the last 30 minutes or so the impact on those stocks. Morgan?
All right, I'll take it. And of course, there is a trade negotiation going on at the same time. Megan, thanks. So speaking of Synopsys, its earnings are out. Christina Partsinevelos has those numbers. Christina.
Yeah, and that's why we're seeing a little bit of a turnaround in the stock. So let's talk about the beat for earnings per share coming in at $3.67 adjusted, higher than the street anticipated. Revenue in line, we'll call it $1.6 billion. In terms of the guidance, Q3 guidance, EPS is a little light, 3.82 to 3.87 billion. The street was anticipating $3.97, so a little bit of a miss there. There was a line in the press release, quote, "We're poised," from the CFO, "we're poised to deliver a solid second half, and we're reaffirming our full-year revenue and operating margin guidance, reflecting our confidence in the business and demand for our products." And we're not seeing any impact for the tariffs either in this guidance. There's no comment in this whole release about China, given the news that we just heard from the FT and the White House in terms of what portion of revenue share comes from China. So we'll see in the coming days. But I did reach out to Synopsys, and they're not commenting on this story thus far.
Okay, Christina Partsinevelos, thank you. And shares of Synopsys are up about 1% right now after falling in the final moments of the regular trading session. Well, we are moments away from NVIDIA's earnings, so let's bring in senior markets commentator Mike Santoli for a look at the stock's performance relative to the market over the past year. Hi, Mike.
Yeah, Morgan, it's been pretty much sideways. This is now a 2-year chart of NVIDIA relative to the S&P 500. What you see here is blast off after its February earnings report back in early 2024, and then the May earnings report a year ago, that's when you got your last leg higher relative to the market. In absolute price terms, we got up into the 135s area in June of last year. It's been over 11 months, pretty much flat. The S&P's up 7% or so in that time. Does it mean that the fundamentals have caught up? Well, a lot of people talk about the valuation compression in NVIDIA. Basically, the PE is lower now than it was right before the huge AI investment boom and the huge surge in earnings. Well, it is true, and this is basically the peak you want to look at right there. That's after ChatGPT. But this, to me, is the market kind of front-running the fundamentals and knowing that there was going to be this bonanza of massive earnings growth, and so it's a question of how much you pay on a forward-going basis. We are still up near 30 times earnings, and we've talked about this before. To compare this to Apple, back when it entered its hyper-growth profit phase after the first generation of iPhones became ubiquitous, this is back here in the early 2010s. Look at how low the PE got, below 15. It was a super cheap stock forever, even though earnings were up by 7x between 2009 and 2012 or so. So it shows you not that this is going to happen to NVIDIA, but sometimes the market kind of gets ahead of it and then needs a show-me situation to say, okay, maybe this is a viable ecosystem for services and everything else, and we can re-expand the multiple later. That's what happened with Apple, guys.
Interesting. Well, we are looking for it, Mike. And in the meantime, on the AI trade, C3 AI earnings are out. That stock popping 15% plus. Kate Rooney has the numbers. Kate.
John, so it was a beat on the top and bottom line for C3 AI. You can see that reflected in shares here after hours. We'll start with that EPS number. It was a loss, but it was smaller than expected. 16 cents versus 20 cents, what the street was looking for. That was on revenue of $109 million, better than expected. Subscription revenue also looking stronger than expected here. That came in at, actually, excuse me, it was slightly light, 87 million versus 96 million, which is what the street was looking for. And it was up about 9%. Also some news after hours that C3 AI and Baker Hughes are renewing a joint venture that's going to extend through 2028. Stock is down more than 30% this year. As I mentioned, it popped here. It's up more than 17%. I would note this is a highly shorted name. The short interest is about 19% of the flow. That's about 4 times the average. So you tend to see these outsized moves, but it was a beat in the quarter for this name, guys. Back over to you.
Yes, moving around a lot. Kate, thanks. We're going to keep watching it. So lots of earnings, including C3, already out, but several more still to come. When we come back, we're going to get results from HP.
And at 4:20, the big report everyone is waiting for. We'll get numbers from Nvidia, an instant reaction to those results. Overtime is back in 2.
All right. So we got less than 4 minutes. 4 minutes until the big Powerball number is coming out. I think a lot of people are taking some big bets. Riz is 5x leveraged on Nvidia. What is everybody trading? I'm kind of curious. Are you trading calls, actual shares? Are you trading puts? What is it? What's the play here that you guys are on? You guys already see the positions that I'm on. I've got 900 shares. I was actually contemplating on adding a couple hundred more shares before the earnings, but I was like, you know what? Let me just take a step back. We really don't know what the numbers are going to look like. And then, of course, I've got 6 calls against those NVIDIA shares that I also did roll out until December of this year. So I ended up rolling out from 140 out to 150 strike on NVIDIA. So you can already see the swing on the day here, right? So, I mean, of course, at one point it was lower. I was actually down on the day. Then, of course, push right back up after hours as the stock is climbing once again. It's actually up over 80 basis points after hours, back almost at 136 right now. So you got 3 more minutes until the markets are going to see NVIDIA earnings, and also do participate in the poll. I'm going to end this poll in just about a minute here. We got over 1,000 votes with a very strong bias for NVIDIA to rally. So we'll see how smart 62% of the people that are voting on the upside on NVIDIA really are in a couple minutes here after NVIDIA reports their earnings for the first quarter fiscal year 2026. So 62% voting for a rally on the stock here, and 38% expecting the crash. So I'm going to close this out in just a minute, and then we'll be ready for the actual earnings for NVIDIA in just about a couple minutes here. So let's do this. This is the one earnings that I definitely want to go live. Of course, Tesla and NVIDIA are the 2 earnings that I definitely want to be live for all the time. Of course, other companies are also important, but these are the 2 that are a bigger piece of the portfolio for me. So we're going to end the poll here. 1,051 votes and 62%. Strong bias here. We're going to see a nice rally.
Cents adjusted. Revenue was a slight beat, though. 13.22 billion. Street was looking for 13.14, but it's really the guidance here we're seeing drag things down, and all because of tariffs. Let me say what the CFO says in this press release. Quote, in light of the increased macroeconomic uncertainty, we have adjusted our outlook to reflect moderated demand and the net impact of trade-related costs. They say it's going to take them until Q4 of this year to get everything in order. I also was talking to the CEO, Enrique Lores, about these results, and he tells me kind of what Apple's doing here, moving production for products sold in the United States to places like Vietnam, India, and Thailand instead of China to get around the worst of those tariffs. They think they'll be through that by Q4, but right now, lowering guidance well below expectations because of this. We see shares off 13.5%, guys.
All right, Steve Kovach, thank you. So we're going to talk NVIDIA now? Or we're going to, yep, okay. So let's talk some NVIDIA, and we've got a panel coming up to help us do that. The earnings we expect in just a couple of minutes. Patrick Moorhead, I believe, is with us. Yeah, Angelo Zeno as well. Patrick, I want to start with you on this, in part because of the indications, I won't call it news just yet, that we're getting around the administration's actions on chip design software makers. There's a whole ecosystem out there that companies need in order to make products that work end-to-end. These software design players are part of it. How much does this factor into how even NVIDIA's customers are going to be able to optimize and make the best use of the product?
Yeah, so John, I'm surprised it took the administration this long to get underneath the hood here, whether it's Synopsys, Cadence, or Siemens, because you cannot make complex chips without this type of software. Now, there are one-off alternatives in China, right? We've talked about the Huawei hedge in China against Nvidia. There are multiple Chinese companies who are in this business, but it will take time for that to permeate, because the Chinese are still using these three companies' tools in mass.
And Angelo, at the same time, Jensen Huang, CEO of NVIDIA, has argued that if you don't compete head-to-head with a lot of these in the China market, that you open the door for other competitors who might have an inferior product to step in. Does that hold here as well? Hold on. NVIDIA results are out. We are going through it. We're going to have to interrupt you, Angelo, with that as soon as it's ready. But what your thoughts on this situation as it applies to NVIDIA and the design software players?
Yeah, no, I mean, listen, I actually agree with Patrick in the sense that it probably took longer than I thought for this to actually come down, and I wouldn't be surprised if part of this was for trade bait, and if we potentially see them get even more aggressive, maybe even on the chip equipment side of things. But we'll kind of wait to see how that all plays out. But no, I would agree with the context in the sense that, hey, listen, if you're empowering some of these Chinese players, specifically Huawei, in many respects, you're doing NVIDIA a disservice. But also in the same respect, if you're not selling, or if you're preventing some of these, the EDA software from going into China, now that does crimp some of the competition or competitive challenges out there for NVIDIA. So it could also be a positive out there for NVIDIA.
So, Pat, we're still doing some tap dancing here as we go through these numbers and what's expected to be a perhaps somewhat noisy quarter for NVIDIA, since we know that they took a charge, a $5.5 billion charge tied to China and those H20 chips.
Very, very strong beat, by the way, everyone. 96 cents in earnings per share, and we're looking at $44 billion on the revenue, also guiding higher. As what I can tell right now, revenue's up over 69% year on year, and EPS is up 57% on a year over year, an 8% quarter over quarter increase on earnings per share. Revenue's up 12% on a quarter over quarter basis. We're seeing Nvidia almost at 140 right now, 3.5% higher at the moment. P&L for the day is now sitting at over 4,500 after, of course, this massive, massive spike in Nvidia.
Getting a beat on the top and bottom line, 96 cents adjusted. The street was anticipating 93 cents adjusted. That was wavering just over the last few days, so it is a 3-cent beat. Revenue is $44.06 billion, slightly higher than what the street anticipated. To your point about the write-downs, as a result of these new requirements, NVIDIA has incurred a $4.5 billion charge in the first quarter. Remember, they said that they were going to take a $5.5 billion, so possibly some more details coming as to when the rest of that will be hit. But and then data center revenue, because that's an important factor for their revenues, $39.1 billion, which was a little bit light of the street estimates on FactSet, guys. And I'll come back with a little bit more details on Q2 guidance.
Okay, we'll be ready and waiting. In the meantime, do not miss Jim Cramer's first on CNBC interview with NVIDIA CEO Jensen Huang. That's coming up at 6 p.m. Eastern on Mad Money. Patrick, I'm going to go back to you. Your initial reaction to what we just heard. Stocks popping.
I told you in my note we were going to have a double beat for the quarter, seven consecutive quarters of double beats, and here we have an eighth. I'm not surprised at all. And this was going to be one of the noisier quarters now, but second half is all about upside with Blackwell.
Okay. Angela Zeno, I want to get your thoughts here, too, especially with data center coming in perhaps a hair light, but we also know there have been capacity restraints and that demand has far outpaced supply, at least up until now.
Yeah, I mean, I think results overall were solid. I mean, 39, billion or so is pretty much in line with our expectations, and it definitely shows you that momentum is building for Blackwell. It was 11 billion in the January quarter. Interesting to kind of see what it'll look like here this quarter, but clearly the shift towards those large-scale rackable systems will continue to drive that momentum on a sequential basis. I think that the number implies about 10 or 11% growth, so it is a deceleration from what we've seen in past quarters. Again, we'll see what that guidance looks like. I would expect another quarter of deceleration because of the China uncertainty out there before we see a pickup again, as we progress through the following quarters.
Pat, lots of questions out there about the runway for NVIDIA. It's done so well, but I was talking to Charlie Giancarlo, the CEO over at Pure, and it certainly is part of this ecosystem with enterprise class flash storage being so important. He said really the demand, the AI-driven demand is only just beginning. They're not even really factoring it up. Hold on, we got some more on NVIDIA's guide. Christina Partsinevelos has that. Let's get back to her. Christina.
The guidance for Q2 is coming in at $45 billion. We are actively choosing not to compare two street estimates. That's because of the write-down from the 5.5, or I should say $4.5 billion in loss from the H20 chip ban. The company is saying their outlook reflects a revenue loss of approximately $8 billion due to the recent export control limitations. So $8 billion will be hit in the July quarter. That would be Q2 this upcoming summer. Just 2 weeks ago, Jensen Huang, the CEO, said that they would be getting about a $15 billion hit in losses. It seems like he's quantifying it for July quarter at $8 billion. Q2 revenue, again, the guidance is coming in at $45 billion. Back to you guys.
Christina, thanks. Pat, 53 billion would have been a different number for the outlook, huh?
Yeah, it would have. And we have to keep in mind, too, you write down something, it doesn't mean it's scrap, right? There's a lot of stuff that's work in progress. And like other companies we've seen, there's potential to be that worked off, but they do have to take the hit this quarter. And on the guide, right, I get a lot of questions on, well, will the Middle East make up for it? And there was a little bit of discussion of that before. China was 13%, 5%.
So overall, I would say very, very strong numbers from NVIDIA. So these are the final numbers for anybody who's joining in right now. So we came in at $44.06 billion of revenue. That's up 12% quarter over quarter and 69% on a year-over-year basis. EPS coming in at 96 cents per share, which is also higher significantly on a year-over-year basis, about over 40%. Or so, I think 50%. And then you're looking at the data center revenue that's coming in at just over $39.1 billion. That's up 10% quarter over quarter and 73% on a year-over-year basis. Now, NVIDIA did mention about a $7 to $8 billion loss due to the recent export control limitations, and that's exactly what we were kind of expecting, around the $7 to $8 billion mark. I think if this number was higher, then it could have been a bit more problematic for NVIDIA, but I think the $7 to $8 billion mark kind of reaffirms what we were expecting in terms of the write-off because of the China export restrictions. However, that is going to be made up from the UAE market as well, the Middle East, right? So a lot of commitments coming in from Saudi Arabia and the UAE, and revenue expected for the second quarter 2026 at $45 billion, and that is also reflective of some very strong growth on a year-over-year basis. Gross margins expected at 71.8% to 72% respectively, plus minus 50 basis points. Operating expenses expected around $5.7 billion and $4 billion respectively on a GAAP, non-GAAP basis. And for the full year to be expected in the mid 30% range for the company as well. NVIDIA achieved progress since its previous earnings announcements in these areas. Data center first quarter revenue up 39.1 billion, 10% quarter over quarter. Also announcing building factories in the U.S., working with its partners to produce NVIDIA AI supercomputers in the U.S. as well. Introducing Blackwell Ultra, NVIDIA Dynamo for accelerating the scaling AI reasoning models. So all in all, I mean, the stock is higher, but not by a lot, of course, considering that it's multiple $1 trillion worth of a stock here, but we're still seeing almost a 3% rip right now. And then, of course, we'll see what happens once Jensen Huang starts talking in 30 minutes. So all in all, I mean, this is, of course, the position, one of the bigger positions. And one of the reasons why I did push out my calls from 140 to 150 is because of this very reason. I was a little bit more skeptical. The closer we get up to 140, the more they're kind of vulnerable to getting in the money. So I want to be giving my shares a bit more of a breathing room to see how high can we actually get up to. And they're pushed out to like 6 months out. So I'm kind of okay until then. So yeah, 62% of folks were expecting the stock to actually go up and rally. So congratulations. But yeah, I mean, for the most part, 2.5%, close to 3% is not a whole lot, but it can certainly make still some difference with where we are. So I'm gonna go through some of the comments here. I know everybody's waiting for the earnings call. I can't make any promises if I'm gonna be live for that. Just because it's going to get very, very late. If the earnings call actually starts at 1 in the morning, then it's probably going to go until like 2 in the morning. And then NVIDIA CEO Jensen Huang is going to be speaking with Jim Cramer on CNBC at 2 in the morning or 2:15 in the morning. Then, I mean, I'll be in bed like by 3:30. So, are you winning, son? Yeah, I know. I love that meme. So, yeah, all in all, congratulations, everyone, to most of the NVIDIA bulls here. We'll see what happens, of course, over the course of next several hours as Jensen Huang starts talking. But overall beat is very strong. I mean, despite the China restrictions, I mean, NVIDIA coming in with yet another beat, there was no doubt about it, right? I mean, if you come over to NVIDIA's last 8 quarters, the company has beaten expectations every single time. There's 100%, probability that we've seen NVIDIA beat earnings over the last 2 years. 2 years, NVIDIA has not missed on revenue or on EPS. There was no confusion that NVIDIA is going to be higher in terms of EPS and revenue against the consensus. But the stock price, of course, has been a bit more back and forth, right? So last earnings, the day after the earnings, it was down 8%. The earnings prior to that, we were basically flat. And a couple earnings ago, we were actually down over 6%. So all in all, the stock price movement, of course, can be a bit of a hit or miss. But earnings beat was, I guess, never in question because we were kind of expecting that to begin with. So 140, are we seeing 140 here? I don't know. I mean, we're almost at 140. We got up to as much as 140 actually. That was the high for this candle, 139.98, and this kind of printed 140 on the high. So we did get up to those levels. And where's Riz? 5x leveraged. Guess you're having a nice steak today. So yeah, overall, I would say this was a very, very good beat on NVIDIA. Very good numbers. And, somebody mentioned earlier that, even a 28 or a 30 times PE multiple is expensive or higher. I mean, not really when you consider a stock that's actually growing earnings by over 50%, right? If it's trading at a 30 PE, you've still got a PEG ratio which is lower than 1. So that still makes, NVIDIA on a valuation basis pretty attractive, right? When you consider NVIDIA against, let's say, the likes of Tesla or Palantir or any other growth stock for that matter. If the stock's able to grow earnings by over 40, 50%, then a valuation multiple of 25, 28, 30 is still quite reasonable, in my view. So, too late to start a position. I mean, we're almost at 140 now. All-time highs are 153. So, it really depends on the time horizon. The risk reward certainly has shifted quite a bit for... is SoFi pushing down after hours here? It's a little bit off topic, but 0.5% lower, basically flat after hours. So what is NVIDIA's 5x ETF? I don't think there is a 5x ETF. I think there's only NVDL, which is 2 times levered, and it's up over 5% after hours, after the NVIDIA earnings. SoFi calls, yep. I've also got SoFi calls here. I've sold those calls on SoFi, so they expire on June 6th, so very, very soon. Yeah, NVIDIA's got a way of swinging down after good earnings, though. We'll see what happens tomorrow because the day after the earnings, once everyone's got the time to digest, then it'll be the real move, and we'll see what happens then. Yeah, that's a different company altogether. And then NVDX is 2x long NVIDIA ETF. Once again, it's up another 5.6%, similar to NVDL. So that's really what it is are leveraged ETNs that you got to be very, very careful with if you are trading or investing in them.
From the CFO comments that are on NVIDIA's website. And so remember we talked about the $4.5 billion write-down that NVIDIA had to take because of the H20 ban. The CFO comments are saying that that write-down is lower than expected. Originally, they were expecting $5.5 billion. And the reason it's lower is that they were actually able to reuse certain materials. And this is a little bit of information because a lot of people, a lot of analysts thought that these H20 chips, because they're so low spec, they wouldn't be able to find another home anywhere else. It seems like maybe possibly at least $1 billion was able to find a new home. And then for Q2, that revenue guidance that was given does reflect an $8 billion hit from the H20 ban. So possibly it could be just Q1 and Q2 taking the brunt of this, and then we move on. But I'm sure we'll get more details as to any long-term Q3 and Q4 impact from this H20 ban coming from the U.S. government. Guys?
Okay, investors seem to be taking in stride. Shares of Nvidia are still up 3% right now here in overtime. Christina, thank you. Let's talk about Nvidia and what it means for the broader AI landscape and for the VC world and all those private companies. Let's bring in Byron Dieter, partner in Bessemer Venture Partners and a noted cloud AI and software investor. And Byron, it's great to have you back on the show. Let's start right there. What does this report from Nvidia tell us about what we're seeing in terms of this phase of AI rollout and adoption?
Thanks, Morgan. Great to be back. I think what this tells us is that they're still able to deliver on the supply side because there's never been a question on the demand side. We hear it from the foundation model companies. We hear it from the hyperscalers that they are, begging their supply chains to deliver these chips. And so it all comes down to NVIDIA's ability to continue to meet the supply demands that are coming through and keep up with production. The short term, we think this will continue, and it's no surprise that they beat and put up another fantastic print. The question is all about the medium and long term as silicon competition comes online, as the hyperscalers produce their own chips in a really credible way. We expect to see this massive market share lead start to pull back, and that might put some pressure in the medium and long term on NVIDIA's performance.
What this reflects to me, whether it's these charges and revenue guidance that we're seeing NVIDIA, the deals that have been struck with, Middle East sovereign nations like Saudi, these export controls we're seeing where NVIDIA chips are concerned with China, and even the software companies that we reported on here in the past hour as well, like Synopsys and some of the others. What's increasingly clear to me is that AI has become a geopolitical lightning rod, whether it's from an economic standpoint, a military standpoint, just a technological standpoint, and what it means for the future of the world, to put it very dramatically. And I wonder what you think that means in terms of this intersection of investment and policy and how it all shakes out.
Well, you hit on the fascinating two core drivers here, which not only is this an economic imperative for the U.S. to win in and at, but it's also a matter of national security. Geopolitical dominance depends on winning the AI battle. And so this should be first and foremost at the top of our U.S. policy. And I applaud the government's initiatives recently to support and embrace the AI ecosystem, but this is front and center. And so as we think about job creation ahead, as we think about wealth creation, as we think about cyber defense, it all comes back to AI these days and the imperative for us to lead.
Byron, it seems to me we have a really important test case here with the Trump administration. Do walls work with intelligence? And I'm thinking about what's happening with international students and the holdup in those visas being approved. I'm thinking about Synopsys out with earnings just minutes ago, but the stock move in Synopsys was all about potential effectively export controls, and that's a big part of NVIDIA's report as well. A number of ideas and opinions out there, including from Jensen Huang himself in recent days, saying, look, we need to compete head-to-head with the entire world. How do you think that's going to shake out?
Yeah, I think there's two very big differences. One is the connected markets for economics and for talent, which generally the tech industry is very supportive of. I think that's very different with China in particular because of the national security imperatives. And so
I think NVIDIA is just going to leave my chart. I think I have to keep adjusting it because it's like all the way to the top right. It just wants to get out of my chart all the way up there.
When you start to get into situations where you're exporting, the leading chips and really frontier edge capabilities, both in hardware and software, that's where we understand the lines that are being drawn and generally support the policies to have some bifurcation here, given the strategic imperative for U.S. to win.
From an investor perspective, what do you think the likelihood is that some of these tough stances toward China, whether we're talking about Nvidia, Synopsys, and that group, really have to do with the trade negotiation that's going on now? And when that clears up, perhaps these limitations clear up as well?
Of course, they're intertwined, and that there will be some holdover. However, we do think of AI chips as part of national security, much like you think of defense tech. And so where that line is drawn will be a matter of the cutting edge chips and really the nuances of the tech innovation cycles. However, we don't expect them to come off entirely. And in fact, I think this will continue to be a matter of top debate, and it really will cross DOD and national security imperatives much more than economics when you get into really the cutting edge technology.
Byron, quickly, the fact that you just bought into the San Francisco 49ers, what does it say about the business of investing in sports right now and valuations?
I think it's a comment on the value of live entertainment, of sports, that people are seeking more and more of this balance, and that the business of sports is real and open for business. It's exciting to see the emergence of private equity and venture capital into the sports world. We've been long investors in sports tech and sports adjacent things like StubHub. Now you're going to see more and more private equity and venture participation directly into teams and leagues in a really powerful way.
All right, Byron Dieter, thanks for joining us.
Cheers.
The recent market comeback has been one of the fastest ever. Up next, find out where history says the market.
All right, everyone, what are we doing? Live for the earnings call, or what are we doing here? Because we got lots of people watching. I definitely want to be live, but I also want to sleep. I'm just kidding. I know you guys are gonna give me a hard time if I go to bed now. So tough decisions. Tough decisions. Sleep in tomorrow. You can sleep when you die. If you guys will make some jokes, keep me laughing, maybe I'll be live for a little longer. And we'll see how long we can keep this party going until I drop dead. Might just sleep here, right on the live stream. You guys can wake me up when Jensen Huang starts talking. Take some coffee. Absolutely no. After 12 p.m. there's no coffee going into my system. Maybe a decaf at 4 p.m. but nothing else, because I can't sleep if I take too much caffeine after like noon. I know, crazy. I try to go to bed like super early, So, sleep stream. SOXL not moving much. Yeah, because, again, it's a little bit more diversified. It's got a lot of other stocks in it. So, push-up and sit-ups. If you drop Nvidia, we'll go down. Take a little nap. No, that's fine. I mean, we'll be live. We'll push through it. I mean, it's only once a quarter thing, so we'll push through it, So, only money will go your system without any time limit. Put a poll for sleep or awake. All right, let's do that. Let's do it. Let's just do a quick poll on only if we can hit a certain like count. We only got 200 people that have hit the like button. That's crazy. Only 20% have liked the stream, so make sure that you drop a like. I would really appreciate that. All right, I'll let the people speak. I'll let the people make the decision for me. So, and so yeah, we've got 16 more minutes until Nvidia starts. Jensen Huang starts talking. Nvidia is trading at just over 140 now. Very strong break to the upside. So we'll see. 2020 in the house. Thank you so much for that donation. I really appreciate that. I'm definitely going to use that for the decaf So what time is it where you are? It's almost 1 in the morning. So 1 a.m. is when Jensen Huang starts talking. And I really, really want to do a lot of live streams. You know, I really want to do a lot of live streams during earnings and earnings calls, but it becomes very, very difficult. Like, I really want to do a lot of live streams and trade and, you know, obviously take a look at the markets with all of you guys, but it becomes challenging, you know, once you are in a completely different time zone. Because I used to do that. I used to stay up like till 2 or 3 in the morning. But then that really screwed up my entire system, and I had a really hard time. I remember this time in India where I couldn't sleep at all. I was like good 3-6 months. I was like, no, I need to fix this. And then eventually I was like, okay, I need to finally fix this. And then since then, I've taken it very seriously. What's everyone's average price on Nvidia? Well, obviously, yeah. So if anyone can share that, go ahead. But I'm sitting at just under 115 right now on Nvidia with 900 shares, and of course I've sold 6 calls, and this entire portfolio is shared with all the members on Patreon as well. This live stream was amazing, Tony says. We made it, guys. Thank you so much. I appreciate it. So David says 108 with 500 shares. That's incredible. Congratulations, man. Absolutely crushing it, by the way, Dave. Huge shout out to you. I see a lot of absolutely killer plays, and that's the beauty of our community. Is it's not just me that you can expect trade alerts and ideas from. We've got a lot of members sharing absolutely amazing ideas, because it is really just a collective effort of our community, and it's like-minded individuals that are coming together to share the best strategies. And we've got a very conservative approach to investing and trading. So we're not swinging for the fences. We're not taking an insane amount of risk, but our philosophy is kind of rooted in our idea that risk is something that we analyze and manage first, and the reward will take care of itself. So whatever we analyze, whatever stock we're looking at, we always look at it from the perspective of risk and reward. It's not just, oh, how much money can we make from the stock? It's also, how much could we potentially lose, and how do we manage that? So that's our analysis, and our philosophy in the community is very, very conservative approach. And as I said before, you know, I'd rather be conservative and right than be aggressive and wrong, because if I'm aggressive and wrong, that blows me out of the water. And I was listening to Morgan Housel the other day on the YouTube channel called Diary of a CEO. This guy, very similar to Lex Friedman, does a lot of interviews from, you know, a lot of people. And Morgan Housel, once again, was talking about the core ingredient for success is longevity and survival. People who've been doing it for many, many decades are the ones who actually have risen all the way at the top. There could have been many opportunities for some of the biggest, you know, billionaires, wealthiest people to have sold their companies very early on and then just retire. But the reason that they are successful and they've gotten to where they are is because they didn't take that decision to sell. They continue to do that. So longevity was one of the big reasons why they were successful. So that's the core focus of our community, is to keep at it, you know, for the long term. Like, we're going to be here long before everyone's left. So we're still going to be there, standing strong. And that's going to be the most important thing for us. So yeah, shout out to a lot of our members. I know a lot of you guys are here. Megalift, Mike, Dave, Kevin. You know, you guys, I really appreciate you all. And thanks. Thank you. Ken's over here, 700 shares at $87. Incredible, Ken. I know I'm looking at your indicators as well. So we'll definitely get back on that. Dan, congrats, but I own no Nvidia, but I celebrate your good fortune. Rely on you for sensible, stable, sound insights, a win-win. That's great. And we're always here to help and look out for each other. And that's the beauty, right? We're always here to provide objective analysis as well. It's not like, okay, whether you have a position or not, we're not trying to push our biases or our analysis onto something. Just because I own it doesn't mean, I'm not gonna tell you the reality, right? That's the thing, right? Even if I own Palantir or Tesla or Nvidia, I'm gonna tell you when it's overbought. I'm gonna tell you when it's overvalued, when it's trading at insane valuation. So that's why we have to be objective. And nothing really, is truly 100% objective. Never. It's impossible to be 100% objective, but our goal is to get to 99%. So 600 shares, $99 long, 2026. Incredible, amazing. Lots of great positions here from you guys on Nvidia.
There have to be a lot more of these kind of false dawn rallies, and it has to basically grind you lower. That's what happened in 2022. I think you should remember there was a retail trading bubble in 2020 and 2021, and in the first decline in 2022, retail bought it, and we almost got back. It wasn't quite down 15% and up to within 3%. It was down 14.5%, back up to within 4%. That was the first rally in the first quarter of that year, and then it failed. And by the fall of 2022, you had retail outflows, and people had all the favorite SPACs, and the unprofitable tech were left for dead. So I think it takes a really long period of time for retail traders who are very energized and really have ammo and are almost playing with house money for them to kind of give up that trade.
Okay. Mike, Paul, thanks to you both for sticking around, and Nvidia is pretty much at session highs, up more than 4%. We're just moments away from Salesforce's earnings call. Up next, the top analyst is going to tell us what he wants to hear from management there at the top of the hour.
All right, so let's take a look at the consensus on where we are. Am I staying or am I sleeping? And we've got 68%. Okay, I'm staying up. 68% to stay awake, and I actually wanted to stay up today anyway. So I'm happy to be here, spending time with my other family. And then we'll listen in on Jensen Huang together to see what he has to say, and of course, how Nvidia stock actually reacts after Jensen Huang starts talking. So we're pushing up. We're pushing higher. 140.50 is where we're at, up over 4% right now. So very, very strong move. And let's take a quick look on some of the other stocks as well. So we've got Tesla, which is, let's see here. Tesla is also higher, 1.3% up. And then we've got S&P 500 after hours up over 32, and QQQs right now are pushing up over 64 basis points after hours as well. So 141, almost 141 on Nvidia right now. AMD is up over 1.3. ASML is essentially flat, but let's take a look at Broadcom. Also very nice rally, 1.7% on Broadcom. SOXL not moving all that much. Well, that's up 3%, not bad. And then TSM is up 1.4. SMH is up over 1.7%. So tomorrow could be a very strong day for semis if this rally were to continue, if this rally stays. So 140.88 is where we're at. Almost 6,000 P&L on the day for the options portfolio. So 8 more minutes until Jensen Huang comes out with the earnings. Yeah, so 8 more minutes until this begins. And then we'll just minimize this. We'll put that over here somewhere. Actually, right about there maybe. And then I'll have my portfolio over there as well. And we'll take a look at the Nvidia price action. We're just breaking above 141. There it is, 141 on the print. This is a level that we haven't seen from Nvidia since the peak of February 18th. So February 18th, that was the peak before Nvidia obviously dropped all the way down to $87. That was a 38, almost a 40% drop for Nvidia. And right now, as it stands, we are not that far off from all-time highs. We're less than 9% away from all-time highs. Too late to get into CoreWeave. I feel like there is a lot of hype. Just be very careful with this. Up over 6% after hours. There is, again, extreme overbought and overstretched conditions. I mean, the stock has gone absolutely insane with a 272% rally. So be extremely careful with this. And again, like I said, just technically there's a lot of momentum, a lot of hype. Just be very, very mindful. All right. We are ready in about 6 minutes.
Sales and Service Cloud growth rates continue to decelerate. And then you have the overhang of M&A's back. And as you know, when Benioff's doing M&A, everyone worries, are we out of organic growth? They haven't done a big deal for a while, so there's some concerns around, why are they going back into the M&A pool on that side? I'd say the last factor, John, really is just there's more dynamic, exciting growth assets right now in software. You see many other stories growing a lot faster. So I think there's an element of, the new CFO in, are they going to be more conservative? Is M&A back? And ultimately, we've got a decel in both the core sales and service clouds on the growth rate. Agentforce isn't necessarily ready for prime time across their install base. They said 8,000 customers, half are paid. So a good stat there, but I think it's super early in the age of AI, and that won't be a material revenue driver until 2026.
You sound a little downbeat to me, Brent. I am curious as well what you think of Salesforce, their latest acquisition. I mean, this is a company that hasn't necessarily had the best history in recent years with their acquisitions, but does this actually turn the tide for them?
Yeah, I'm not downbeat. I'm just kind of calling the numbers as we see them, Morgan. So I'm not trying to be super downbeat. They're fine. It's just there's no dramatic acceleration or exciting fireworks in the print. So the numbers are the numbers. I'd say for Informatica, we're excited that this wasn't an expensive asset. They got it for $2 million cheaper than they were going to bid on it last year. It fulfills a really unique area around data integration, so they need to get the right data to their data clouds to do AI. So Informatica, along with MuleSoft and some of the other infrastructure assets, help them get to the age of AI, which is how do you get the data cleansed, centralized, to then do AI on top of it. So I think the deal is a smart deal. But again, Informatica wasn't a growth company. It was a single-digit growth company, good margin. But again, most investor feedback on Informatica was kind of like, blah, nothing super exciting. Everyone kind of expected it would come back.
All right, Brent Thill, thanks for joining us. You do have a buy rating on the stock. Up next, one more check on Nvidia ahead of the call.
All right. I mean, this is incredible, guys. I mean, I don't want to jinx it, but 141.50 is where we're at. We're officially up over 5% on Nvidia after hours. So a pretty strong move, and glad I moved those calls out. Otherwise, those would have been in the money right about now, breaching over 140. A part of me, a small part of me, I was driving back home. A small part of me was thinking, let me just do a buy right on Nvidia. Let me just add a couple hundred shares. And I would have done it if I were not so exposed on one stock. You know, if this wasn't like a big position, which is like over 50% is in Nvidia right now, certainly that would have been an idea. But here we are rolling Nvidia calls. Megalith says, deja vu. I know, it's been so many times in the last 1 year I've kind of rolled Nvidia. Yeah, it was the right call. Previous earnings, it actually went down. Yeah, so you never know, right? With earnings. Joel, thank you so much. You're the best inspiration on YouTube. Love your knowledge sharing. Thank you so much. I really appreciate that. And again, it's a collective community effort. I want to continue to hammer on this point that, you know, it's not just me, but we've got a team, we've got a community behind this that is very supportive of the collective mission that we're here to achieve. So, all right, everyone. So just about a minute left until the earnings. So let's get ready. And I'm excited. I'm excited to see what Jensen Huang has to say for the earnings here. Will he wear the jacket? We don't know. Probably already is, but don't know. Let's go 150 tomorrow, Deepak says. 150 would be insane if it got up to 150. Like, we're talking almost all-time highs. Would be pretty solid. Optimus Prime, how's the earnings? Earnings were fantastic. Beat on both ends, revenue, EPS, guidance. Very strong numbers coming in. We're just waiting for the earnings call to start. Again, everyone who's joining us, beat on EPS, beat on revenue, 96 cents in earnings per share, 44 billion in revenue. Confirm with me the audio. Let me know if the audio is good, okay?
Don't want to miss that. And John, we talked about it earlier in the show, but it does feel like geopolitics is really at the heart of the tech trade.
Good afternoon. My name is Sarah, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's first quarter fiscal 2026 financial results conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star 1 on your telephone keypad. If you would like to withdraw your question, please press star 1 again. Thank you. Toshiya Hari, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the first quarter of fiscal 2026. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the second quarter of fiscal 2026. The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, May 28, 2025, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thank you, Toshiya. We delivered another strong quarter with revenue of $44 billion, up 69% year over year, exceeding our outlook in what proved to be a challenging operating environment. Data center revenue of $39 billion grew 73% year on year. AI workloads have transitioned strongly to inference, and AI factory build-outs are driving significant revenue. Our customers' commitments are firm. On April 9th, the U.S. government issued new export controls on H20, our data center GPU designed specifically for the China market. We sold H20 with the approval of the previous administration. Although our H20 has been in the market for over a year and does not have a market outside of China, the new export controls on H20 did not provide a grace period to allow us to sell through our inventory. In Q1, we recognized $4.6 billion in H20 revenue, which occurred prior to April 9th, but also recognized a $4.5 billion charge as we wrote down inventory and purchase obligations tied to orders we had received prior to April 9th. We were unable to ship $2.5 billion in H20 revenue in the first quarter due to the new export controls. The $4.5 billion charge was less than what we initially anticipated as we were able to reuse certain materials. We are still evaluating our limited options to supply data center compute products compliant with the U.S. government's revised export control rules. losing access to the China AI accelerator market, which we believe will grow to nearly 50 billion, would have a material adverse impact on our business going forward and benefit our foreign competitors in China and worldwide. Our Blackwell ramp, the fastest in our company's history, drove a 73% year-on-year increase in data center revenue. Blackwell contributed nearly 70% of data center compute revenue in the quarter, with a transition from Hopper nearly complete. The introduction of GB200 NVL was a fundamental architectural change to enable data center scale workloads and to achieve the lowest cost per inference token. While these systems are complex to build, we have seen a significant improvement in manufacturing yields, and rack shipments are moving to strong rates to end customers. GB200 NVL racks are now generally available for model builders, enterprises, and sovereign customers to develop and deploy AI. On average, major hyperscalers are each deploying nearly 1,000 NVL 72 racks, or 72,000 Blackwell GPUs per week, and are on track to further ramp output this quarter. Microsoft, for example, has already deployed tens of thousands of Blackwell GPUs and is expected to ramp to hundreds of thousands of GB200s, with OpenAI as one of its key customers. Key learnings from the GB200 ramp will allow for a smooth transition to the next phase of our product roadmap, Blackwell Ultra. Sampling of GB300 systems began earlier this month at the major CSPs, and we expect production shipments to commerce later this quarter. GB300 will leverage the same architecture, same physical footprint, and the same electrical and mechanical specifications as GB200. The GB300 drop-in design will allow CSPs to seamlessly transition their systems and manufacturing used for GB200 while maintaining high yields. B300 GPUs with 50% more HBM will deliver another 50% increase in dense FP4 inference compute performance compared to the B200. We remain committed to our annual product cadence, with our roadmap extending through 2028, tightly aligned with the multiple year planning cycles of our customers. We are witnessing a sharp jump in inference demand. OpenAI, Microsoft, and Google are seeing a step function leap in token generation. Microsoft processed over 100 trillion tokens in Q1, a 5-fold increase on a year-over-year basis. This exponential growth in Azure OpenAI is representative of strong demand for Azure AI Foundry, as well as other AI services across Microsoft's platform. Inference-serving startups are now serving models using B200, tripling their token generation rate and corresponding revenues for high-value reasoning models such as DeepSeek R1, as reported by Artificial Analysis. NVIDIA Dynamo on Blackwell NVL72 turbocharges AI inference throughput by 30x for the new reasoning models sweeping the industry. Developer engagements increased, with adoption ranging from LLM providers such as Perplexity to financial services institutions such as Capital One, who reduced agentic chatbot latency by 5x with Dynamo. In the latest MLPerf inference results, we submitted our first results using GB200 NVL72, delivering up to 30x higher inference throughput compared to our 8 GPU H200 submission on the challenging Llama 3.1 benchmark. This feat was achieved through a combination of tripling the performance per GPU, as well as 9x more GPUs, all connected on a single NVLink domain. And while Blackwell is still early in its life cycle, software optimizations have already improved its performance by 1.5x in the last month alone. We expect to continue improving the performance of Blackwell through its operational life, as we have done with Hopper and Ampere. For example, we increased the inference performance of Hopper by 4 times over 2 years. This is the benefit of NVIDIA's programmable CUDA architecture and rich ecosystem. The pace and scale of AI factory deployments are accelerating, with nearly 100 NVIDIA-powered AI factories in flight this quarter, a 2-fold increase year over year, with the average number of GPUs powering each factory also doubling in the same period. And more AI factory projects are starting across industries and geographies. NVIDIA's full-stack architecture is underpinning AI factory deployments as industry leaders like AT&T, BYD, Capital One, Foxconn, MediaTek, and Telenor are strategically vital sovereign clouds like those recently announced in Saudi Arabia, Taiwan, and the UAE. We have a line of sight to projects requiring tens of gigawatts of NVIDIA AI infrastructure in the not-too-distant future. The transition from generative to agentic AI capable of perceiving, reasoning, planning, and acting, will transform every industry, every company, and country. We envision AI agents as a new digital workforce capable of handling tasks ranging from customer service to complex decision-making processes. We introduced the Llama Nemotron family of open reasoning models designed to supercharge agentic AI platforms for enterprises. Built on the Llama architecture, these models are available as NIMs or NVIDIA Inference Microservices with multiple sizes to meet diverse deployment needs. Our post-training enhancements have yielded a 20% accuracy boost and a 5x increase in inference speed. Leading platform companies, including Accenture, Cadence, Deloitte, and Microsoft, are transforming work with our reasoning models. NVIDIA NeMo microservices are generally available across industries and are being leveraged by leading enterprises to build, optimize, and scale AI applications. With NeMo, Cisco increased model accuracy by 40% and improved response time by 10x in its code assistant. NASDAQ realized a 30% improvement in accuracy and response time in its AI platform's search capabilities. And Shell's custom LLM achieved a 30% increase in accuracy when trained with NVIDIA NeMo. NeMo's parallelism techniques accelerated model training time by 20% when compared to other frameworks. We also announced a partnership with Yum Brands, the world's largest restaurant company, to bring NVIDIA AI to 500 of its restaurants this year and expanding to 61,000 restaurants over time to streamline order taking, optimize operations, and enhance service across its restaurants. For AI-powered cybersecurity, leading companies like Checkpoint, CloudStrike, and Palo Alto Networks are using NVIDIA's AI security and software stack to build, optimize, and secure agentic workflows, with CloudStrike realizing 2x faster detection triage with 50% less compute cost. Moving to networking, sequential growth in networking resumed in Q1, with revenue up 64% quarter over quarter to $5 billion. Our customers continue to leverage our platform to efficiently scale up and scale out AI factory workloads. We created the world's fastest switch, NVLink. For scale up, our NVLink compute fabric in its 5th generation offers 14x the bandwidth of PCIe Gen 5. NVLink 72 carries 130 terabytes per second of bandwidth in a single rack, equivalent to the entirety of the world's peak internet traffic. NVLink is a new growth vector and is off to a great start, with Q1 shipments exceeding $1 billion. At Computex, we announced NVLink Fusion. Hyperscale customers can now build semi-custom CCUs and accelerators that connect directly to the NVIDIA platform with NVLink. We are now enabling key partners, including ASIC providers such as MediaTek, Marvell, Alchip Technologies, and Astera Labs, as well as CPU suppliers such as Fujitsu and Qualcomm to leverage NVLink Fusion to connect our respective ecosystems. For scale out, our enhanced Ethernet offerings deliver the highest throughput, lowest latency networking for AI. Spectrum X posted strong sequential and year-on-year growth and is now annualizing over $8 billion in revenue. Adoption is widespread across major CSPs and consumer internet companies, including CoreWeave, Microsoft Azure, Oracle Cloud, and xAI. This quarter, we added Google Cloud and Meta to the growing list of Spectrum X customers. We introduced Spectrum X and Quantum X silicon photonics switches featuring the world's most advanced co-packaged optics. These platforms will enable next-level AI factory scaling to millions of GPUs through the increasingly power efficiency by 3.5x and network resiliency by 10x while accelerating customer time to market by 1.3x. Transitioning to a quick summary of our revenue by geography. China, as a percentage of our data center revenue, was slightly below our expectations and down sequentially due to H20 export licensing controls. For Q2, we expect a meaningful decrease in China data center revenue. As a reminder, while Singapore represented nearly 20% of our Q1 build revenue, as many of our large customers use Singapore for centralized invoicing, our products are almost always shipped elsewhere. Note that over 99% of H100, H200, and Blackwell data center compute revenue billed to Singapore was for orders from US-based customers. Moving to gaming and AI PCs. Gaming revenue was a record $3.8 billion, increasing 48% sequentially and 42% year on year. Strong adoption by gamers, creatives, and AI enthusiasts have made Blackwell our fastest ramp ever. Against a backdrop of robust demand, we greatly improved our supply and availability in Q1 and expect to continue these efforts in Q2. AI is transforming PC and creator and gamers. With a 100 million user installed base, GeForce represents the largest footprint for PC developers. This quarter, we added to our AI PC laptop offerings, including models capable of running Microsoft's Copilot+. This past quarter, we brought Blackwell architecture to mainstream gaming with its launch of GeForce RTX 5060 and 5060 Ti, starting at just $299. The RTX 5060 also debuted in laptops starting at $1,099. These systems that double the frame rate and slash latency. These GeForce RTX 5060 and 5060 Ti desktop GPUs and laptops are now available. In console gaming, the recently unveiled Nintendo Switch 2 leverages NVIDIA's neural rendering and AI technologies, including next-generation custom RTX GPUs with DLSS technology, to deliver a giant leap in gaming performance to millions of players worldwide. Nintendo has shipped over 150 million Switch consoles to date, making it one of the most successful gaming systems in history. Moving to Pro Visualization. Revenue of $509 million was flat sequentially and up 19% year on year. Tariff-related uncertainty temporarily impacted Q1 systems, and demand for our AI workstations is strong, and we expect sequential revenue growth to resume in Q2. NVIDIA DGX Spark and Station revolutionize personal computing by putting the power of an AI supercomputer in a desktop form factor. DGX Spark delivers up to 1 petaflop of AI compute, while DGX Station offers an incredible 20 petaflops and is powered by the GB300 superchip. DGX Spark will be available in calendar Q3 and DGX Station later this year. We have deepened Omniverse's integration and adoption into some of the world's leading software platforms, including Databricks, SAP, and Schneider Electric. New Omniverse blueprints, such as Mega for at-scale robotic fleet management, are being leveraged in Kion Group, Pegatron, Accenture, and other leading companies to enhance industrial operations. At Computex, we showcased Omniverse's great traction with technology manufacturing leaders, including TSMC, Quanta, Foxconn, Pegatron. Using Omniverse, TSMC saves months in work by designing fabs virtually. Foxconn accelerates thermal simulations by 150x, and Pegatron reduced assembly line defects rates by 67%. Lastly, with our automotive group, revenue was $567 million, down 1% sequentially, but up 72% year-on-year. Year-on-year growth was driven by the ramp of self-driving across a number of customers and robust end demand for NEVs. We are partnering with GM to build the next-gen vehicles, factories, and robots using NVIDIA AI, simulation, and accelerated computing. And we are now in production with our full stack solution for Mercedes-Benz, starting with the new CLA, hitting roads in the next few months. We announced Isaac GR00T N1, the world's first open, fully customizable foundation model for humanoid robots, enabling generalized reasoning and skill development. We also launched new open NVIDIA Cosmo World Foundation models. Leading companies include 1X, Agility Robotics, Figure AI, Uber, and Wabi. We've begun integrating Cosmos into their operations for synthetic data generation, while Agility Robotics, Boston Dynamics, and XPen Robotics are harnessing Isaac simulation to advance their humanoid efforts. GE Healthcare is using the new NVIDIA Isaac platform for healthcare simulation, built on NVIDIA Omniverse and using NVIDIA Cosmos. The platform speeds development of robotic imaging and surgery systems. The era of robotics is here. Billions of robots, hundreds of millions of autonomous vehicles, and hundreds of thousands of robotic factories and warehouses will be developed. All right, moving to the rest of the P&L. GAAP gross margins and non-GAAP gross margins were 60.5% and 61% respectively. Excluding the $4.5 billion charge, Q1 non-GAAP gross margins would have been 71.3%, slightly above our outlook at the beginning of the quarter. Sequentially, GAAP operating expenses were up 7% and non-GAAP operating expenses were up 6%, reflecting higher compensation and employee growth. Our investments include expanding our infrastructure capabilities and AI solutions, and we plan to grow these investments throughout the fiscal year. In Q1, we returned a record $14.3 billion to shareholders in the form of share repurchases and cash dividends. Our capital return program continues to be a key element of our capital allocation strategy. Let me turn to the outlook for the second quarter. Total revenue is expected to be $45 billion, plus or minus 2%. We expect modest sequential growth across all of our platforms. In data center, we anticipate the continued ramp of Blackwell to be partially offset by a decline in China revenue. Note, our outlook reflects a loss in H20 revenue of approximately $8 billion for the second quarter. GAAP and non-GAAP gross margins are expected to be 71.8% and 72% respectively, plus or minus 50 basis points. We expect better Blackwell profitability to drive modest sequential improvement in gross margins. We are continuing to work towards achieving gross margins in the mid-70s range late this year. GAAP and non-GAAP operating expenses are expected to be approximately $5.7 billion and $4 billion, respectively, and we continue to expect full-year fiscal year 2026 operating expense growth to be in the mid 30% range. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $450 million, excluding gains and losses from non-marketable and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 16.5%, plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website, including a new financially information AI agent. Let me highlight upcoming events for the financial community. We will be at the BofA Global Technology Conference in San Francisco on June 4th, the Rosenblatt Virtual AI Summit and NASDAQ Investor Conference in London on June 10th, and GTC Paris at VivaTech on June 11th in Paris. We look forward to seeing you at these events. Our earnings call to discuss the results of our second quarter of fiscal 2026 is scheduled for August 27. Well, now let me turn it over to Jensen to make some remarks.
Thanks, Colette. We've had a busy and productive year. Let me share my perspective on some topics we're frequently asked. On export control, China is one of the world's largest AI markets and a springboard to global success. With half of the world's AI researchers based there, the platform that wins China is positioned to lead globally. Today, however, the $50 billion China market is effectively closed to U.S. industry. The H20 export ban ended our Hopper data center business in China. We cannot reduce Hopper further to comply. As a result, we are taking a multi-billion-dollar write-off on inventory that cannot be sold or repurposed. We are exploring limited ways to compete, but Hopper is no longer an option. China's AI moves on with or without U.S. chips. It has the compute to train and deploy advanced models. The question is not whether China will have AI. It already does. The question is whether one of the world's largest AI markets will run on American platforms. Shielding Chinese chip makers from U.S. competition only strengthens them abroad and weakens America's position. Export restrictions have spurred China's innovation and scale. The AI race is not just about chips. It's about which stack the world runs on. As that stack grows to include 6G and quantum, U.S. global infrastructure leadership is at stake. The U.S. has based its policy on the assumption that China cannot make AI chips. That assumption was always questionable, and now it's clearly wrong. China has enormous manufacturing capability. In the end, the platform that wins the AI developers wins AI. Export controls should strengthen U.S. platforms, not drive half of the world's AI talent to rivals. On DeepSeek and QN from China are among the best open source AI models. Released freely, they've gained traction across the US, Europe, and beyond. DeepSeek R1, like ChatGPT, introduced reasoning AI that produces better answers the longer it thinks. Reasoning AI enables step-by-step problem solving, planning, and tool use, turning models into intelligent agents. Reasoning is compute intensive, requires hundreds to thousands of times more tokens per task than previous one-shot inference. Reasoning models are driving a step function surge in inference demand. AI scaling laws remain firmly intact, not only for training, but now inference too requires massive scale compute. DeepSeek also underscores the strategic value of open source AI. When popular models are trained and optimized on US platforms, it drives usage, feedback, and continuous improvement, reinforcing American leadership across the stack. U.S. platforms must remain the preferred platform for open source AI. That means supporting collaboration with top developers globally, including in China. America wins when models like DeepSeek and QN runs best on American infrastructure. Regarding onshore manufacturing, President Trump has outlined a bold vision to reshore advanced manufacturing, create jobs, and strengthen national security. Future plants will be highly computerized and robotics. We share this vision. TSMC is building 6 fabs and 2 advanced packaging plants in Arizona to make chips for Nvidia. Process qualification is underway, with volume production expected by year-end. SPIL and Amcor are also investing in Arizona, constructing packaging, assembly, and test facilities. In Houston, we're partnering with Foxconn to construct a 1 million square foot factory to build AI supercomputers. Wistron is building a similar plant in Fort Worth, Texas. To encourage and support these investments, we've made substantial long-term purchase commitments, a deep investment in America's AI manufacturing future. Our goal, from chip to supercomputer, built in America within a year. Each GB200 NVLink 72 racks contains 1.2 million components and weighs nearly 2 tons. No one has produced supercomputers on this scale. Our partners are doing an extraordinary job. On AI diffusion rule, President Trump rescinded the AI diffusion rule, calling it counterproductive, and proposed a new policy to promote U.S. AI tech with trusted partners. On his Middle East tour, he announced historic investments. I was honored to join him in announcing a 500 megawatt AI infrastructure project in Saudi Arabia and a 5 gigawatt AI campus in the UAE. President Trump wants U.S. tech to lead. The deals he announced are wins for America, creating jobs, advancing infrastructure, generating tax revenue, and reducing the U.S. trade deficit. The U.S. will always be NVIDIA's largest market and home to the largest installed base of our infrastructure. Every nation now sees AI as core to the next industrial revolution, a new industry that produces intelligence and essential infrastructure for every economy. Countries are racing to build national AI platforms to elevate their digital capabilities. At Computex, we announced Taiwan's first AI factory in partnership with Foxconn and the Taiwan government. Last week, I was in Sweden to launch its first national AI infrastructure. Japan, Korea, India, Canada, France, the UK, Germany, Italy, Spain, and more are now building national AI factories to empower startups, industries, and societies. Sovereign AI is a new growth engine for NVIDIA. Toshiya, back to you. Thank you.
Operator, we will now open the call for questions. Would you please poll for questions?
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from the line of Joe Moore with Morgan Stanley. Your line is open.
Great, thank you. You guys have talked about this scaling up of inference around reasoning models for at least a year now, and we've really seen that come to fruition as you talked about. We've heard it from your customers. Can you give us a sense for how much of that demand you're able to serve, and give us a sense for maybe how big the inference business is for you guys, and do we need full on NVL72 rack scale solutions for reasoning inference going forward?
Well, we would like to serve all of it. And I think we're on track to serve most of it. Grace Blackwell NVLink 72 is the ideal engine today the ideal computer thinking machine, if you will, for reasoning AI. There's a couple of reasons for that. The first reason is that the token generation amount, the number of tokens reasoning goes through, is 1,000 times more than a one-shot chatbot. It's essentially thinking to itself, breaking down a problem step by step. It might be planning multiple paths to an answer. It could be using tools, reading PDFs, reading web pages, watching videos, and then producing a result, an answer. The longer it thinks, the better the answer, the smarter the answer is. And so what we would like to do, and the reason why Grace Blackwell was designed to give such a giant step up in inference performance, is so that you could do all this and still get a response as quickly as possible. Compared to Hopper, Grace Blackwell is some 40 times higher speed and throughput compared. And so this is going to be a huge, huge benefit in driving down the cost while improving the quality of response with excellent quality of service at the same time. So that's the fundamental reason. That was the core driving reason for Grace Blackwell NVLink 72. Of course, in order to do that, we had to reinvent, literally redesign the entire way that these supercomputers are built. But now we're in full production. It's going to be exciting. It's going to be incredibly exciting.
The next question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for the question. Just a clarification for Colette first. So on the China impact, I think previously it was mentioned at about $15 billion. So you had the $8 billion in Q2. So is there still some left as a headwind for the remaining quarters? Just Colette, how to model that. And then question, Jensen, for you. Back at GTC, you had outlined a path towards almost $1 trillion of AI spending over the next few years. Where are we in that build out? And do you think it's going to be uniform, that you will see every spender, whether it's CSP, sovereigns, enterprises, or build out? Should we expect some periods of digestion in between? Just what are your customer discussions telling you about how to model growth for next year?
Yes, Vivek. Thanks so much for the question regarding H20. Yes, we recognized 4.6 H20 in Q1. We were unable to ship 2.5 billion, so the total for Q1 should have been 7 billion. When we look at our Q2 is going to be meaningfully down in terms of China data center revenue. And we had highlighted in terms of the amount of orders that we had planned for H20 in Q2. And that was 8 billion. Now going forward, we did have other orders going forward that we will not be able to fulfill. That is what was incorporated, therefore, in the amount that we wrote down of the $4.5 billion. That write down was about inventory and purchase commitments. And our purchase commitments were about what we expected regarding the orders that we had received. Going forward, though, it's a bigger issue regarding the amount of the market that we will not be able to serve. We assess that TAM to be close to about 50 billion in the future, as we don't have a product to enable for the China.
Vivek, the probably the best way to think through it is that AI is several things. Of course, we know that AI is this incredible technology that's going to transform every industry. From, of course, the way we do software to healthcare and financial services to, retail, I guess every industry, transportation, manufacturing, and we're at the beginning of that. But maybe another way to think about that is where do we need intelligence? Where do we need digital intelligence? And it's in every country, it's in every industry. And we know because of that, we recognize that AI is also an infrastructure. It's a way of delivering a technology that requires factories. And these factories produce tokens. And they, as I mentioned, are important to every single industry in every single country. And so on that basis, we're really at the very beginning of it, because the adoption of this technology is really kind of in its early stages. Now, we've reached an extraordinary milestone with AIs that are reasoning, are thinking, what people call inference time scaling. Of course, it created a whole new, we've entered an era where inference is going to be a significant part of the compute workload. But anyhow, it's going to be a new infrastructure, and we're building it out in the clouds. The United States is really the early starter, and available in U.S. clouds, and this is our largest market, our largest installed base, and we'll continue to see that happening. But beyond that, we're going to see AI go into enterprise, which is on-prem, because so much of the data is still on-prem. Access control is really important. It's really hard to move every company's data into the cloud. And so we're going to move AI into the enterprise. And you saw that we announced a couple of really exciting new products. Our RTX Pro enterprise AI server that runs everything enterprise and AI. Our DGX Spark and DGX Station, which is designed for developers who want to work on-prem. And so enterprise AI is just taking off. Telcos. Today, a lot of the telco infrastructure will be in the future software defined and built on AI. And so 6G is going to be built on AI. And that infrastructure needs to be built out. And it's at its very, very early stages. And then, of course, every factory today that makes things will have an AI factory that sits with it. And the AI factory is going to be creating AI and operating AI for the factory itself, but also to power the products and the things that are made by the factory. So it's very clear that every car company will have AI factories, and very soon there'll be robotics companies, robot companies, and those companies will be also building AIs to drive the robots. And so we're at the beginning of all of this build out.
The next question comes from CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. There have been many large GPU cluster investment announcements in the last month, and you alluded to, a few of them with Saudi Arabia, the UAE, and then also, we heard from Oracle and xAI, just to name a few. So my question, are there other that have yet to be announced of the same kind of scale and magnitude? And perhaps more importantly, how are these orders impacting your lead times for Blackwell and your current visibility sitting here today, almost halfway through 2025?
Well, we have more orders today than we did at the last time I spoke about orders at GTC. However, we're also increasing our supply chain and building out our supply chain. They're doing a fantastic job. We're building it here on shore in the United States, but we're going to keep our supply chain quite busy for many more years coming. And with respect to further announcements, I'm going to be on the road next week through Europe, and it's just about every country needs to build out AI infrastructure, and they're umpteen AI factories being planned. I think in the remarks, Colette mentioned there's some 100 AI factories being built. There's a whole bunch that haven't been announced. And I think the important concept here, which makes it easier to understand, is that like other technologies that impact literally every single industry, of course, electricity was one, and it became infrastructure. Of course, the information infrastructure, which we now know as the internet, affects every single industry, every country, every society. Intelligence is surely one of those things. I don't know any company, industry, country who thinks that intelligence is optional. It's essential infrastructure. And so we've now digitalized intelligence. And so I think we're clearly in the beginning of the build out of this infrastructure, and every country will have it. I'm certain of that. Every industry will use it. That I'm certain of. And what's unique about this infrastructure is that it needs factories. It's a little bit like the energy infrastructure, electricity. It needs factories. We need factories to produce this intelligence. And the intelligence is getting more sophisticated. We were talking about earlier that we had a huge breakthrough in the last couple of years with reasoning AI, and now there are agents that reason, and there's super agents that use a whole bunch of tools, and then there's clusters of super agents where agents are working with agents, solving problems. And so you could just imagine, compared to one-shot chatbots and the agents that are now using AI built on these large language models, how much more compute intensive they really need to be and are. And so I think we're in the beginning of the build out, and there should be many, many more announcements in the future.
Your next question comes from Ben Reitzes with Melius. Your line is open.
Yeah, hi. Thanks for the question. I wanted to ask, first to Colette, just a little clarification around the guidance and maybe putting it in a different way. The $8 billion for H20 just seems like, it's roughly $3 billion more than most people thought with regard to what you'd be foregoing in the second quarter. So that would mean that, with regard to your guidance, the rest of the business, in order to hit 45 is doing $2 to $3 billion or so better. So, I was wondering if that math made sense to you, and then, in terms of the guidance, that would imply the non-China business is doing a bit better than the street expected. So, wondering, what the primary driver was there in your view. And then this second part of my question, Jensen, I know you guide one quarter at a time, but with regard to the AI diffusion rule being lifted and this momentum with Sovereign, there's been times in your history where you guys have said on calls like this where you have more conviction in sequential growth throughout the year, et cetera. And given the unleashing of demand with AI diffusion being revoked and the supply chain increasing, does the environment give you more conviction in sequential growth as we go throughout the year? So first one for Colette, and then next one for Jensen. Thanks so much.
Thanks, Ben, for the question. When we look at our Q2 guidance and our commentary that we provided, that had the export controls not occurred, we would have had orders of about $8 billion for H20. That's correct. That was a possibility for what we would have had in our outlook for this quarter in Q2. So what we also have talked about here is the growth that we've seen in Blackwell across many of our customers, as well as the growth that we continue to have in terms of supply that we need for our customers. So putting those together, that's where we came through with the guidance that we provided. I'm going to turn the rest over to Jensen to see how he wants to.
Yeah, thanks. Thanks, Ben. I would say compared to the beginning of the year, compared to GTC timeframe, there are 4 positive surprises. The first positive surprise is the step function demand increase of reasoning AI. I think it is fairly clear now that AI is going through an exponential growth. And reasoning AI really busted through. Concerns about hallucination or its ability to really solve problems, and I think a lot of people are crossing that barrier and realizing how incredibly effective agentic AI is and reasoning AI is. So number 1 is inference reasoning. And the exponential growth there, demand growth. The second one, you mentioned AI diffusion. It's really terrific to see that the AI diffusion rule was rescinded. President Trump wants America to win, and he also realizes that we're not the only country in the race, and he wants the United States to win, and recognizes that we have to get the American stack out to the world and have the world build on top of American stacks instead of alternatives. And so AI diffusion happened. The rescinding of it happened at almost precisely the time that countries around the world are awakening the importance of AI as an infrastructure, not just as a technology of great curiosity and great importance, but infrastructure for their industries and startups and society. Just as they had to build out infrastructure for electricity and internet, you got to build out infrastructure for AI. I think that's an awakening, and that creates a lot of opportunity. The third is enterprise AI. Agents work, and agents are doing, these agents are really quite successful. Much more than generative AI, agentic AI is game changing. Agents can understand ambiguous and rather implicit instructions, and able to problem solve and use tools and have memory and so on. And so I think this is enterprise AI is ready to take off, and it's taken us a few years to build a computing system that is able to integrate, run enterprise AI stacks, run enterprise IT stacks, but add AI to it. And this is the RTX Pro Enterprise server that we announced at Computex just last week. And just about every major IT company has joined us, and I'm super excited about that. And so computing is one part of it, but remember, enterprise IT is really three pillars. It's compute, storage, and networking. And we've now put all 3 of them together finally, and we're going to market with that. And then lastly, industrial AI. Remember, one of the implications of the world reordering, if you will, is regions onshoring manufacturing and building plants everywhere. In addition to AI factories, of course, there are new electronics manufacturing, chip manufacturing, being built around the world. And all of these new plants and these new factories are creating exactly the right time when Omniverse and AI and all the work that we're doing with robotics is emerging. And so this fourth pillar is quite important. Every factory will have an AI factory associated with it, and in order to create these physical AI systems, you really have to train a vast amount of data. So back to more data, more training, more AIs to be created, more computers. And so these four drivers are really kicking into turbocharge.
Your next question comes from Timothy Arcuri with UBS. Your line is open.
Thanks a lot. Jensen, I wanted to ask about China. It sounds like the July guidance assumes there's no SKU replacement for the H20, but if the president wants the U.S. to win, it seems like you're going to have to be allowed to ship something into China. So I guess I had two points on that. First of all, have you been approved to ship a new modified version into China, and you're currently building it, but you just can't ship it in fiscal Q2? And then you were sort of run rating $7 to $8 billion a quarter into China. Can we get back to those sorts of quarterly run rates once you get something that you're, allowed to ship back into China? I think we're all trying to figure out how much to add back to our models and when. So, whatever you can say there would be great. Thanks.
The president has a plan. He has a vision, and I trust him. With respect to our export controls, it's a set of limits, and the new set of limits pretty much make it impossible for us to reduce Hopper any further, for any productive use, and so the new limits, it's kind of the end of the road for Hopper. We have limited options, and so we just the key is to understand the limits. The key is to understand the limits and see if we can come up with interesting products that could continue to serve the Chinese market. We don't have anything at the moment, and but we're considering it. We're thinking about it. Obviously, the limits are quite stringent at the moment, and we have nothing to announce today. And when the time comes, we'll engage the administration and discuss that.
Your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Hi, this is Jake on for Aaron. Thanks for taking the question, and congrats on the great quarter. I was wondering if you could give some additional color around the strength you saw within the networking business, particularly around the adoption of your Ethernet solutions at CSPs, as well as any change you're seeing in network attach rates.
Yeah, thank you for that. We now have 3 networking platforms, maybe 4. The first one is the scale up platform, to turn a computer into a much larger computer. Scaling up is incredibly hard to do. Scaling out is easier to do, but scaling up is hard to do. And that platform is called NVLink. And NVLink comes with it chips and switches and NVLink spines, and it's really complicated. But anyways, that's our new platform, scale up platform. In addition to InfiniBand, we also have Spectrum X. We've been fairly consistent that Ethernet was designed for a lot of traffic that are independent. But in the case of AI, you have a lot of computers working together. And the traffic of AI is insanely bursty. Latency matters a lot because the AI is thinking and it wants to get work done as quickly as possible. And you got a whole bunch of nodes working together. And so we enhanced Ethernet, added capabilities like extremely low latency, congestion control, adaptive routing, the type of technologies that were available only in InfiniBand to Ethernet. And as a result, we improved the utilization of Ethernet in these clusters. These clusters are gigantic, from as low as 50% to as high as 85%, 90%. And so the difference is, if you had a cluster that's $10 billion and you improved its effectiveness by 40%, that's worth $4 billion. It's incredible. And so Spectrum X has been really, quite frankly, a home run. And this last quarter, as we said in the prepared remarks, we added 2 very significant CSPs to the Spectrum X adoption. And then the last one is Bluefield, which is our control plane. And so in the control plane of the network, which is used for storage, is used for security, and for many of these clusters that want to achieve isolation among its users, multi-tenant clusters, and still be able to use and have extremely high performance, bare metal performance. Bluefield is ideal for that and is used in a lot of these cases. And so we have these four networking platforms. They're all growing, and we're doing really well. I'm very proud of the team.
Over to you.
That is all the time we have for questions. Okay. Jensen, I will turn the call back to you.
Thank you. This is the start of a powerful new wave of growth. Grace Blackwell is in full production. We're off to the races. We now have multiple significant growth engines. Inference, once the lighter workload, is surging with revenue-generating AI services. AI is growing faster and will be larger than any platform shifts before, including the internet, mobile, and cloud. Blackwell is built to power the full AI lifecycle, from training frontier models to running complex inference and reasoning agents at scale. Training demands continues to rise with breakthroughs in post-training and like reinforcement learning and synthetic data generation. But inference is exploding. Reasoning AI agents require orders of magnitude more compute. The foundations of our next growth platforms are in place and ready to scale. Sovereign AI nations are investing in AI infrastructure like they once did for electricity and internet. Enterprise AI must be deployable on-prem and integrated with existing IT. Our RTX Pro, DGX Spark, and DGX Station enterprise AI systems are ready to modernize the $500 billion IT infrastructure on-prem or in the cloud. Every major IT provider is partnering with us. Industrial AI, from training to digital twin simulation to deployment, NVIDIA Omniverse and Isaac GR00T are powering next-generation factories and humanoid robotic systems worldwide. The age of AI is here. From AI infrastructures, inference at scale, sovereign AI, enterprise AI, and industrial AI. NVIDIA is ready. Join us at GTC Paris. I'll keynote at VivaTech on June 11, talking about quantum GPU computing, robotic factories and robots, and celebrate our partnerships building AI factories across the region. The NVIDIA band will tour France, the UK, Germany, and Belgium. Thank you for joining us at the earnings call today. See you in Paris.
This concludes today's conference call.
All right.
You may now disconnect.
So overall, I would say pretty good earnings call. I think the China restriction and the export controls definitely put a little bit of a, some weakening on the stock price itself because, of course, of the write-off, $7-8 billion. We weren't able to get a lot of color on what the future might look like. But Jensen Huang was confident that Donald Trump has a plan. The administration has a plan. They'll be engaging with the administration on the new Blackwell chips, and obviously they cannot reduce the specs on the Hopper anymore to try to accommodate the limitations that have been put in place by the US on China with these export sanctions. But Jensen Huang did seem a little bit overworked, not gonna lie. He didn't seem like super enthusiastic, but of course the point was to get the job done. So thank you so much for joining, everyone. It's like 2 a.m. I still have to record the market update, so I'll get that out in the next hour. So again, thank you so much. Stocks up over 4%. We're kind of hovering just over $140, so that's good to see. Again, link's gonna be down below if you're interested in joining us. And And thank you so much for being a part of our live stream today. So again, I'll post the market update shortly today within the next hour. Take care.